In today's Smart Money, Congress continues to debate various deals to avoid a federal government shutdown. Without a resolution soon, are we in for some bumpy days in the stock market? Well, ABC-7's financial contributor Brian Mirau is here to provide some perspective. Brian, can you explain what's happening with the federal government right now?
Well, Mark, the fiscal year ends on September the 30th, and currently there isn't any funding beyond that date because Congress hasn't agreed on a spending bill. And, without the passage of a spending bill, or at least a temporary stopgap, the federal government would be forced to shut down. A shutdown would disrupt the U.S. economy and the lives of millions of Americans who work for the government or they rely on federal services.
So, Brian, overall, how concerned should we be?
Well, Mark, the level of concern regarding a shutdown depends on several factors, including the duration of the shutdown, its impact on essential services, and the specific circumstances surrounding the shutdown. The main thing you want to consider is the duration. Short-term government shutdowns may have less immediate effects, but if a shutdown continues for an extended period of time, it can lead to significant disruptions in the government services and affect the economy. The longer it lasts, the more concern it's going to generate.
So how do the markets tend to react to news like the possibility of a shutdown?
Well, Mark, markets tend to dislike government shutdowns due to the uncertainty that they cast on the economy and big companies. Analysts at Yahoo Finance, they found that in the lead up to the last 7 government shutdowns lasting 10 days or more, the median decline on the S&P 500 was a little over 10%. And researchers estimate that $6 billion in real GDP could be cut from the fourth quarter if the government is closed for just 1 week.
Could there be any positives from a government shutdown?
Well, keep in mind, where there can be some scary headlines, the long-term impacts aren't usually as serious. You don't want to panic or make knee-jerk financial decisions. Of course, we don't want a shutdown, but analysts say that government shutdowns tend to be high-profile but low-impact market events. And looking at the last 20 government shutdowns dating all the way back to 1976, stocks have been up 50% of the time during the actual shutdown period. And the other positive is what happens after the government reopens. Markets often roar back after a shutdown, and research shows that in the last 12 months following a shutdown of 10 days or more, the S&P has gained a median of 18.9%.
Brian, what else would you like to leave us with today?
Well, Mark, there's always going to be financial turbulence and market worries. My firm helps our clients by doing what we call a retirement and financial analysis. And this analysis can help you uncover the main risk that's posing a threat to your retirement today, especially volatility in the market. We can do a stress test on your retirement plan and then analyze your portfolio and just see how much you can handle in terms of losses in the case of a market downturn. And Mark, one more thing today, we're offering a free complimentary copy of my book titled Smart Money for the Backside of Life for anyone wanting to set a visit. And in my book, I discuss many different aspects of retirement that folks deal with on the backside of life.
So text the word retire to 915-233-2904 for your free retirement financial analysis. And you can set a visit to receive a copy of Brian's book, Smart Money for the Backside of Life. Again, the number to text retire to is 915-233-2904. You can also visit their website online at mirocapital.com/TV. ABC-7 financial contributor Brian Mirau with Mirau Capital Management. Thank you as always for your time, sir.
Mark, thank you so much for having me today.